There's our disclaimer. Now, most of your clients, so you've probably seen this a fair number of times before. What that means is don't go out here and do anything we say to you tonight without getting personal professional advice. And most of you are already getting personal professional advice from one of us. Who are we? Most of you will know who we are. We're actually one of Australia's largest wealth management organisations. 26 years young, great South Australian employer, benefits of scale. We look after now about $1.8 billion of clients' money across about 25, 26 advisors, depending on the day. So it's really quite a big organisation here in South Australia. Those are some of the business. You know, we also always like to say what we do also as an employer and the business. So those are some of the organisations we're also members of. So as you know, we're a stockbroker, and we're actually a member of the Stockbrokers Association. In fact, there's probably 4 or 5 of us, including me, who are master stockbrokers now. We've got that designation. Member of the Financial Planning Association, the Mortgage and Finance Association, FINSIA, CEDA, AIM, CFA Institute, that's Certified Financial Analysts, which is essentially a global organisation. So a couple of our people have now got what are global designations out of the United States. And we're also a member of the Self-Managed Super Fund Professionals Association. So in other words, the umbrella body for self-managed super fund administration. And that's some of us. Some here tonight. That's some of us, and there's some even more of us. So you can see we've really got quite a diversity of people. And one of the things you've been noticing about the business is there actually is a bit of not so much a generational change going on, but we're actually looking to bring through quite a lot of new advisors. And Sue Goh, who will be speaking tonight, started advising about 6 months ago, was in our paraplanning team. So we're actually trying to bring through new people all the time, which I think is really important in a business of our size. So the post-election economic update, that's a bit of the summary. So the global economy is looking better. The Australian economy, strange enough, is probably going to be slowing down, but then starting to pick up. I think in 14-15, we've got budget debt and state budget deficits, inflation staying low, probably around 2 to 3%. Although you probably find your overseas trip has just got probably 10 or 15% more expensive in the last 6 months. But you've probably been taking overseas trips for the last 4 or 5 years, benefiting from the Australian dollar. I reckon there'll be another cash rate cut. But one thing you will be noticing, those of you who got term deposits with us, is that those longer term rates are now starting to move up. The short rates are going down. Confidence has lifted significantly post-election. Probably no surprise. The tax system needs an overhaul, and I'll talk about that. And I reckon we're likely at the current low point in terms of the Australian profit cycle. So we're going to start to see profits swing up. The growth across the world, and most of you will have seen this chart before, you've been to some of our presentations, you know, the major economies, the United States, Japan, Europe, still growing really quite slowly, although, as I'll talk a bit in a minute, I think the United States is actually going to surprise on the upside in terms of its growth rate. Could well be one of the more strongly growing economies across the world. China, India, Indonesia, all these other countries still doing very, very well. You know, complaining about growth slowing down, and you say, yeah, I wouldn't mind growing at that pace. So those things are driving the Australian economy and are also going to be driving what happens to budget and economic policy and what they can actually spend money on. But also note down here, deposit rates in the United States are expected to stay well below 1%. If you're looking at a term deposit in the United States today, you'd probably have to go out something like 20 years before you get anything above 1%. Where their inflation rate's 2 or 3. So even bond rates, government bonds over there, you're looking at something like 10 years before it's much above 2%. So what we've got in Australia now is unusual, interest rates being so low, but we are far better off as investors than most of the rest of the world. US companies, and it's one of the reasons when we talk about investments, we sort of look at this type of chart. The blue is what's happening to company profits in the United States. There's the GFC, Global Financial Crisis. Here's where they are now. US companies are making more money than they've ever made before. And when you look at their profits as a ratio of their total margins, total economy, that's the highest, in fact, I can find numbers for, and that goes back to when I started collecting this data in the 1930s. Some of you might go back even further, but that's about the best profits I've ever seen. And those are some of the things that are driving it. Very low interest rates, cheap energy, some of our seminars, and if you want a bit more detail on it, this gas fracking that you hear about, the price of gas in the United States is a third of what it is in Europe and Japan. You're seeing businesses move back to the United States from Asia because of the cheapness of the gas. They've really had negligible wages growth, very strong productivity gains. That's what's driving this. The companies are keeping the profits. And they've got a competitive US dollar. So we're actually quite positive about the US economy over the next 4 to 5 years. And you hear a lot about the US budget deficit, Alan Kohler and others. That's when the budget deficit of the United States was running at about 11% of their economy. It's now back to around 2%, and it's likely to stay there. The US could be running a budget deficit which is smaller than ours in proportionate terms this year and next year. That's what I'd like to ask Mr. Swan in a year's time if he's still in Parliament. How come our budget deficit is higher than that of the United States? So all of the stuff we heard earlier in the year about the US economy was going to hit this fiscal cliff and fall over the edge and whatever else, they've gone through that, and now their budget deficit is really relatively small. And that again then gives them a bit more flexibility. But it's probably one of the reasons too why President Obama doesn't want to do things in Syria, because he wants to get the budget deficit down. The other thing too is the US is actually going to become energy independent in the next couple of years. They could in fact become one of the world's largest exporters of gas and oil again. So at some stage I reckon the Americans are going to say to the Chinese, here you go, here are the keys to the Middle East, you look after it. That will have some significant issues sort of strategically, geopolitically. China, so the two things we're focused on, United States and China. China's economic growth, and here we are sort of, was 12%, bubbling around 7.5 to 8%. That's what they've been telling us for the last 3 to 4 years they'll be growing at. And people go on about how Chinese economic data is rubbish, can't trust it. Well, I'd be saying back, they've actually been collecting this data for 2,500 years. How long have we been collecting it for? 50, 60? Now, they may be getting it wrong and it might be dodgy, but they've been doing it a lot longer than we have. I think their economic growth is actually going to continue on at this 7.5 to 8%. What do they want to do? Why is this going to impact us? They want to spread the benefits of growth, so they're increasing wages. Wages are growing 15 to 20%, and you're actually now seeing people saying China's too expensive, we're going to go back to the United States. We're going to go to Myanmar, we're going to go to Pakistan. They want to lift the value-added industry, so move up from making socks to making, computer chips, and doing that. They want to increase consumption. They want better and more housing. And you remember you see those pictures of all these homes that are vacant around China? And then 2 or 3 years later you see another city. Well, they've actually filled that city up behind that you saw 2 to 3 years ago. That people are now living in it. They want to increase tourism. That's happening. China is already now the world's biggest inbound tourism market. It also provides more tourists to the rest of the world than anyone else. In Australia, there are now more tourists coming from China than anywhere else, and they also spend more money here than anyone else. That's why why Mr. Macris wants to actually have a fast ferry to Kangaroo Island. It's not for us, for people who get off the plane, get on a little bus, go straight down the hop on the ferry and go to Kangaroo Island. But what do they like about Kangaroo Island? They like Kangaroo Island's canola honey. They don't like Tasmania's leatherwood honey. I don't know why, but they don't like it. So you get real specialists. There's one young group, you might see them when you fly out of the duty-free area of Adelaide Airport. They know the Chinese like red wine because red's an auspicious colour. They like gold. So they've actually packaged up, and it's probably coming out of a cask from somewhere. But they've got a nice bottle flown in from France which has gold all over it, and it comes in a case, it's timber and red and gold. They're selling that for $180 a shot to the Chinese tourists to take home because they like the look of it. Better care for the AIDS. There's already a law being passed in China. You'd probably like this, and you might think about whether it should come here. That if the parents can actually prosecute the kids if the kids don't give them the appropriate amount of comfort and care. That's now law. We think that's important because it could be businesses like Ramsay Healthcare who can then say, go over there, don't say to the parents, we'll do it, they can say to the kids. We'll look after your parents so you don't get sued. And they want to reduce pollution. Everyone goes on about how polluted China is. Yes, some of you may recall how polluted London was, New York was. Now they're very clean cities. So as you get rich, you actually get cleaner. They want to get rich first. And those are the types of indicative numbers for China. So this is what their total economy might look like. $8 trillion US, which is about 7 times our size. So that's going to grow by 180%, but the point is consumption. In other words, what they spend on the type of stuff we like to spend money on, grog, food, travel, that's going to grow up by 250%. That's why tourism is so important to them. So yes, the Chinese economy is going to slow down, but it's going to be growing in quite different areas. And I think a lot of those areas are actually still going to be very good for us. And what you'll be noticing already is the price of cheese is going up, because the Chinese are eating more pizza. Now, it's little things like that, and you might have also seen the things about how there's a world shortage of milk powder. Why is that? Because the Chinese don't trust their own milk powder for feeding to their kids, so they buy it from us. Those things are changing the dairy industry quite significantly. But at the same time, investment is still going to more than double. It's going to spend it different ways. And what we've seen there is iron ore and copper prices came down a bit, but are now going sideways. Everyone was expecting the iron ore price to collapse to about, $70, $80 a tonne. Hasn't done it. I don't think it will do it. The copper price is holding up here around global financial crisis levels. The Australian economic background, so this is what Mr. Abbott and Mr. Hockey and Mr. Robb and all these others are going to be basing their forecasts on. Real economic growth of about 3% over the next couple of years. Still pretty good. Inflation staying pretty low, about 2.5%. Unemployment, I think they're probably a bit optimistic here, probably a bit higher. But you sort of see that's the background to it. Now, again, what this is meaning is that like household consumption, so Woolies, Wesfarmers and others, probably growing about 2 to 3%, not really going to roar away. Dwelling investment in the housing sector starting to pick up, but probably the number of housing starts still relatively low. So again, we're looking at that in terms of what investments we should be talking to you about. Inflation, but one of the issues, again, where we keep thinking about what investments is that the government in its budget back in May was expecting that business investment would be picking up strongly. Well, these are the latest numbers out from August. So there's the level of investment in 2012, about $160 billion. That's probably tapering off. So the mining sector, interesting, still growing, but a lot of other areas are actually really quite weak. So there's going to be this issue about how you get business confidence up in order to get investment growing so that the economy gets to grow again. That's happening. It's amazing how quickly this turned around. These are from, the Westpac Melbourne Institute, you might see that being reported in the press. This is a measure of consumer confidence, about how confident people are about actually going out and buying some big things like cars and fridges. That has surged in the aftermath. In fact, it was running higher before the election, I think in anticipation there was going to be a change of government. So consumer confidence is really back to the levels, some of the better levels we'll see. The other surge, look at this. This was the surge in the National Australia Bank survey of business confidence, about how confident business is. Now, this has surged even though businesses themselves said things are getting worse. They're expecting things to get better. So you can sort of see the election has actually changed quite a few things. And we're starting to see even a lift in share prices. And again, this is for Australia. Here's company profits, just sort of come back a bit with the fall off in mining prices, but are now starting to grow again. And I think we've gone through the worst of it. What's going to be the background of this though? Households are saving more than they've saved really for 25 years. This is the household savings ratio. This is the amount you're saving, not so much you, but the general sector are saving, as a percent of disposable income, what they take home. Back in 2003, 2004, people would take home $100 and spend $104. Now they take home $100 and spend $90. The question is, when is this going to start to get back to more levels like this? Or have we seen a step shift? I think we're going to now start to see that come down a bit. But it's not going to happen straight away, because one of the things that's affecting households out there is that their debt as a percent of income is still very high. That really hasn't come down yet. Dwelling prices are now starting to lift, which is going to help confidence. So we're starting to see in Sydney, Melbourne, Perth, how house prices are now starting to rise. Now people say to me, aren't these house prices far too high? And I say, yes, it's nothing to do with the building industry, it's to do with the restrictions on land availability. South Australia, they reckon, now has the highest price per square metre of land of anywhere in Australia, including Sydney. So when you see your house, land prices look pretty steady, that's because the size of the land has been shrinking. The average size block now is about 350 square metres. So this is going to take a while. Here's net worth as a percent of total income. You can sort of see it's going sideways. Liabilities, in other words debt, has sort of stabilised about 150%. But it's going to take a bit longer, I think, for households really to pick up. But we're now starting to see a bit of a lift in housing finance activity. So again, that's a bit of a sign, I think, that confidence is starting to return, at least in one sector. The government is forecasting that we'll run back into surplus by about 2016-2017 from the current budget deficit. I don't think that is actually going to happen. But this is sort of showing what the government was saying as part of the pre-economic financial outlook, was that the budget would go from deficit back into surplus. But what's that based upon? It's not based upon them cutting spending. I've never seen a government cut spending. They always spend more year on year. What is this based upon running in a surplus? Significant increase in taxes. So over this, between 13-14 to 15-16, they are forecasting that taxes are going to rise by $50 billion. And that type of percentage increase. So here we have PAYG, in other words, individual tax payments are expected to rise by 20%. If you put together their forecasts about employment and wages growth, it comes out to about 12%. The gap is bracket creep. And some of you might well remember that back in the 90s, perhaps even in the 50s and 60s. And then company tax is going to surge. Superannuation fund taxes going up by 50%. They didn't put the statutory superannuation contribution up from 9% to 12% to help the people. They put it up because they wanted more tax. 15% tax, remember, is paid on it. Mm-hmm. So my view is one of the things we're going to have to be thinking about when we're setting investments and strategies is there's going to have to be a significant overhaul of the tax system over the next 3 to 4 years. What these numbers show here, the blue line, put it in blue because it's normally positive, is what's happening to average weekly male full-time earnings. This is what males on average earn across Australia for the full-time work. And that's been growing from back in 1995, about 38,000. By 2016, it's probably going to be up around $90,000. Those are the tax thresholds. So what's going to happen over in this year is that the person on average weekly full-time male earnings is going to head into the 38.5% tax bracket. Now that's, when I talk to businesses about that, you sort of got to raise the question, do you think people are going to work the overtime, the extra hours you want, if 40 cents in every dollar is going straight to tax? That's the issue I think the government's going to be facing. They changed the tax rates here, so most people were not within a bull's roar of actually hitting that second marginal tax rate. They will now be, this year they will be into that marginal tax rate, and if the tax rates don't change, you can sort of see a significant part of income is now going to be paying tax at 39 cents, which is the 37 cents plus the 2 cent Medicare levy. That's going to require a change to the tax system. As you might recall, this was what back here prompted the introduction of the GST in order to get tax rates down. We're heading into the same situation. So the common ground of the major parties, and the next speakers are going to talk about some of this, is no GST increase, get the budget back to surplus, no changes to personal income tax rates, that's going to have to happen, no major cutbacks. So those are the common grounds for the parties. And I'll put down the bottom there was a common loathing of each other. Particularly the Labor Party, that was a loathing of each other inside the party. And I was actually saying to some people here today, it's amazing, isn't it? We've had 2 weeks now of no government. There hasn't been a parliament. There hasn't even been a prime minister. It's all working pretty well. The ALP election policies, what could stay, increase in tobacco taxes, I don't think that's going to go away. Nope. Better targeting the FBT exemptions for car leases, might be a bit iffy. The approved deposit takers tax, remember that one? Tax on banks, I don't think that will go. Tax on superannuation pension benefit investment income, it's going to be interesting to hear whether Mr Abbott actually takes that away. The big question is they have got no idea how to implement it. And I know that because I wrote them a letter asking how they're going to do it. They don't know. What are some of the real solutions? Scrap the carbon tax, scrap the mining tax, get the budget deficit down, create one, this is, I don't know how Liberals can actually say this, we're going to create 1 million jobs and then create another 2 million jobs. I think, no, it's us creating jobs, not you. Those are some of the things. I said you can get slide, but I suppose the big one is the paid parental maternity leave. It is maternity, even though cats can get it. On salaries up 150,000, probably a bit generous, but I'll say here we should actually be encouraging women on those salaries to have kids. No one else wants to say that because it doesn't sound politically correct. I shouldn't say that. More engagement with Asia. That's going to be interesting. So if you've got Asian language skills, might be approaching a school. Going to be defence white paper. That's probably going to affect Australia, South Australia. They want to increase defence spending to 3% of GDP. It's currently 1.5%. Australia's going to become America's biggest aircraft carrier in any case. There's going to be a new business advisory council, and they're going to have all this infrastructure spending. So there's going to be a whole lot more roads coming on and a whole lot more dams. You know, remember the old country party? Election coming on, you have another dam. Happening again. And the national broadband network is going to be refocused, in other words, stopped. It's far too expensive in its current state. So inquiry into the tax system. There's going to be a commission inquiry into childcare costs and flexibility. The Productivity Commission also had a report on older Australians about 2 years ago. The Liberals have said they'd implement all the recommendations in that at that time. Matthew's going to talk about some of that, whereas Labor came out and sort of did part of it. That I think is going to be quite important across you and me, because some of us are heading towards that. They're going to restore the private healthcare rebate when they run back into surplus. Again, that's an important, I think, issue. And there's a lot of funding going into diabetes and dementia research funding. So that could well help some of the researchers around here. Markets, though, are still expecting a further cash rate cut. So this little green line here is where the markets are expecting the cash rate to go. So it's quite likely we'll see another 0.25% cut over the next couple of months. From an investor's point of view, though, we're already starting to see those longer term interest rates head up. That's that little blue line there. So even though the markets are expecting a cut in the cash rate, they're also expecting longer term rates to be going up. So we're going to be having discussions with you as to what your term deposits might look like. Whether you stay 3 months, 6 months, 12, whether you move out to 4 or 5 years. Because you're going to start to see more benefit for moving out. That's just the Australian dollar, I think, said your overseas trips probably don't expect it to go much more above about 94, 95 cents, but it shouldn't be collapsing to 80 cents. And this is just the way we look at it, which is sort of a commodity price ratio. And as you can see there, very strong relationship between that red line and the blue line, which is the Australian dollar US dollar exchange rate. That's been continuing on. Share markets, we believe they've got earnings support. It starts to lift in 13, 14. Travis will talk about some of the individual stocks about that. They said we've probably seen the worst of the profit decline, and we can start to see things picking up. The markets are expecting this little blue line here is what they're expecting to happen to earnings per share through 13, 14. Now that was coming down, but it's probably now going to be sort of moving sideways. Travis will talk a bit more about that. So I said I've done a quick tour. There's a whole lot of things going to be going on. There's going to be some significant changes to policy, but it's going to be against the background of actually trying to get the budget back into surplus. Probably not real fast, but we've had 2 weeks without a government and things haven't fallen apart yet, so